Hi, I'm Alex, welcome to the channel and thanks for tuning in. In today's video we're talking about BFT, or what is soon to be Paysafe. Now I have covered this stock on the channel for some time now, and on Thursday this week the merger vote was successfully approved and the transaction will be completing and the ticker changing. When the ticker changes, this is the point in time where the lock-up period countdown starts from, and this is something which concerned me in relation to Paysafe from the very start. I said in my first video that I would likely exit my position in advance of the lockup expiring, but this is not an easy decision. In this video, we'll discuss the pros and cons of this, why this is even something I'm talking about if I'm interested in this for the long term, and what we can expect. There are also a few things circulating online which are incorrect, and so as part of this video, we'll dispel those things, and I will also let you know what I'm doing. Being completely honest, this one is a really tough decision for me. Before we get into it, please can you do me a favour and hit the like button. Finance and investing YouTube's becoming more and more clickbaity, and this is not a good thing for the community in the long run. However, the YouTube algorithm loves it, but please can you do our part in our battle against this and hit the like button so the algorithm can learn that it doesn't always have to be this way. Doing this will also be for the betterment of the community on here in the long term as well, so please hit that like button. Over the past few videos where I've asked you this, the response has been amazing. Thank you so much. On the channel, we're reporting better and better view to like ratios, sometimes the best the channel's ever had, and it's working because the videos are now reaching a broader audience. Thank you so much, and please keep it up. If you're new to the channel and you like investing related content, then hit the subscribe button. If you want to be involved in the private Discord, live video chats and other things, then check out the Patreon. And for those of you who were digging me out for my creased t-shirt in my previous videos, I hope this one's better for you. I didn't realise this was a fashion channel. As always, I'm not a financial advisor, this video is purely for educational and entertainment purposes only, but let's get straight into it. So look, I really like BFT and Paysafe, both as a company and as the transaction overall. I believe it has a good management team, they're doing all the right things and doing it very professionally, and that's something definitely which can't be said for all SPACs. It's got great growth prospects as well. It's well capitalised, it's a cash generative business today, and fundamentally it's undervalued versus its peers. First, let's talk about the management, who are doing a great job so far. Just look at the recent analyst presentation for proof of this. They're doing things well and properly and educating the investor community correctly, which should result in a good level of analyst coverage from an early stage in the company's listing period. This is a function of their ownership, which we'll come on to and discuss in more detail later in the video. Paysafe is also delivering great news on a regular basis. Lots of new partnerships announced and other developments, which will all drive increased revenues. Add to this the fact it's an already profitable business and it's generating positive cash flows. These are all things to really like about it. The company is also expected to deliver great growth over the coming years, and this is a function of its alignment to certain verticals, specifically those in online gaming, esports and crypto. These are other areas of the market where I have made other investments into, all of which are backed by long-term thesis which I have a strong conviction in. I do have belief in the expected market growth here, so I do have an overall strong conviction in Paysafe delivering its growth aspirations as well. You're probably thinking, why am I even considering selling here if I have long-term conviction? And that's a really good question, and we will come on to that in a moment. The final thing I want to talk about though is how undervalued versus its peers Paysafe is. Now I'm not going to go into the analysis I've shared in previous videos before. If you want to see those, check out those videos and they're linked in the description below. However, the fundamental point of them remains the same, despite the videos being a couple of months old. Whichever way you cut it, on an EV/EBITDA basis versus peers, on a growth regression analysis basis versus peers, all the other methodologies we looked at and discussed in those videos, Paysafe is undervalued by a multiple of its current stock price versus its peers. Now personally, I expected the market to react more to this and I was expecting a greater rally in the stock price up to the point where we are today, at merger. Fundamentally, I think there's three main reasons why this hasn't actually happened. Firstly, I think the fintech space, from a SPAC investor perspective, is perhaps not as attractive and not as hot as other sectors, such as EV and space-related ones, for example. I think it's a little less sexy, and you have to do a bit more work in understanding the business model and understanding the business's characteristics to understand why it is an exciting business and an exciting investment. Secondly, I think the markets in general have been particularly turbulent over the past 3 to 6 weeks, and SPACs in particular have seen a fair amount of red. Now, not all SPACs are equal. Paysafe is an established, highly cash-generative business, which I think has probably been a bit oversold, especially when you compare it to some pre-revenue SPAC targets, where a sell-off perhaps makes a little more sense. Now, the third reason for this, I think, is around the main shareholders, the PE funds, Blackstone and CVC. If you are invested in BFT and you've not seen the videos where I discuss all the dynamics around this, then I thoroughly recommend that you watch them because they will give you a greater level of insight. They're all linked in the description below. In short though, they're financial investors who are highly likely to sell their remaining investment in Paysafe, accounting for around 50% of the company, once the lock-up period expires, which is around 80 days after the ticker changes. This period does become longer if the stock price falls below $12 post-merger, but that's a different discussion. Both Blackstone and CVC have time constraints on how long they can hold their investment in Paysafe, and this is arising from how private equity funds and investments are structured. They can take steps to avoid this and mitigate this, but there are no signs that they're doing so yet, and typically when these things are done, they do leak into the market. I have also seen a lot of talk recently that mentions the fact that they have board seats, meaning that they're here to stay for a long time. That's actually incorrect. Every private equity fund is required to have board seats in the companies they invest into. They had board seats in Paysafe previously, and they will retain these in the new structure. This is not a sign of anything at all. They're financial investors. They make their returns by exiting and selling their investment in companies for reasonable returns. The current price of BFT represents a very good total return for them if they were to exit. Now, I've done a video covering all the maths around this, so please check that out if you're questioning the mathematics here. Now, yes, there are various ways which they can sell their investment in Paysafe, but my real concern here is that the magnitude of selling pressure in the market will have a significant impact on the stock price, impacting it materially negatively from where we are today. Now, they could do this transaction off-market, which would mean it wouldn't have such a massive negative impact on the valuation, but for me, this remains a really important concern. So if I'm invested in the long term, and I believe in the long-term growth prospects, why am I concerned about this in the short term? Now, that's a really good question. Typically, however, when I make such thesis-led investments, I'm not concerned about short-term price movements. If you have a strong conviction in your investment, a negative movement of 10 to 20% is not the end of the world. It's something you can ride with, and if it comes down enough, you may even see it as an opportunity to invest more into that opportunity. However, I've never invested in a company knowing that there's a catalyst upcoming which is very likely to have a negative impact on the stock price in the short term. If it falls as a function of other factors once I've made my investment, then that is what it is, but I never invested into a company knowing there's that catalyst upcoming. Now yes, of course I could be wrong, and we may not see that decrease in valuation as they exit their position. In fact, the magnitude of the discount in valuation that Paysafe has versus its peers may offset this, however. That being said though, it's something which I feel needs to be addressed and is a very real risk. The other really important dynamic to consider here is that of the post-merger dip, which has become increasingly commonplace for SPACs once they complete their merger. Not all SPACs do it, and there are no trends which we can identify which may give us an indication as to what's coming next. It's not within specific sectors, specific companies of certain sizes, or those with certain shareholder dynamics. Believe me, I'm trying to identify the key characteristics which will give us some sort of indication, and so we can predict how that stock price may behave post-merger. However, as of yet, I'm yet to find anything meaningful. So herein lies my dilemma. I really like BFT, and it's very much aligned to many of the thesis-led investments I've made recently. It has a great addressable market, strong growth prospects, and a great management team to deliver on that strategy. But it has this upcoming catalyst, which I think probability weighted is likely to lead to a decrease in the stock price in the short term, and then potentially present an opportunity to exit my position and then re-enter it for a lower price down the line. It may perform well post-merger and not be impacted by the expiration of the lockup from the PE investors selling their stake. I have no crystal ball, so this is the decision we have to make. As such, I've decided to exit 35% of my position pre-completion of the merger, so before the ticker changes, a further 35% of that in the following 2 weeks following the completion, and then hold the final 30% stake in Paysafe for the long term. When I say long term, that's something in the region of 2 to 4 years. Of course, if we do see a big decrease in the valuation at that point in time, I will assess the business, and provided that nothing has fundamentally changed the investment thesis, I would likely reinvest. However, I reiterate that I could be wrong here. This is just my take on the situation, and other perspectives are clearly valid too. Time will be the true determinant of what the correct decision was here. Let me know your expectations in the comment section below and what you're doing. It's always great to hear those perspectives and debates, so please get involved. Thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investing related content, then hit that subscribe button. Check out the Patreon if you want other exclusive content. And thank you so much for watching, and I'll see you in another video.